Bruce Campbell joins me now. He's a portfolio manager from Stonecastle Investment Management for the Stonecastle Weekly Cannabis Update. Bruce, how are you?
Doing well, yeah. Into 2020.
Great. Well, I'm starting with the same line of questioning for everybody. What's your outlook for the cannabis space in 2020?
Yeah, hopefully it performs better than it did last year. I think it will. You know, what we see is you'll probably see a bifurcation this year. You'll see really the companies that are starting to execute and prove that they know what they're doing versus the ones that probably shouldn't have been public in the first place. You're probably going to see a big differentiation between those. We think that, we actually think that Canadian companies probably will perform better than most people are expecting. And why we think that is because we think that, as these retail sales channels open up, that you'll start to actually see some numbers come through. And then on the U.S. side, we think that there's, tremendous opportunity there. Obviously, we're still watching closely to see what type of legislation changes there could be. But even beyond that, even if there's not, the companies that are there that seem to be executing well are doing well, and we think that investors will probably return back to the space.
Sure. Do you see the uptick in sales in Canada driven by 2.0 products or other factors as well?
Yeah, I mean, I think it's going to be a function of both. So, I think just more retail, and we obviously continue to see these retail locations built out, maybe not as fast as we'd like to see in Ontario, but as we continue to see retail built out, then there's going to be more product that gets in the hands of consumers. And then obviously with the 2.0, that's a whole new product category that right now doesn't exist, and obviously, well, it does in the black market, but it doesn't in the regulated market. But that's where we've always talked about there being a crossover between new patrons into the cannabis sector, where they haven't tried a product before, but they will hopefully try or potentially try something in the 2.0 market that crosses them over, and they become a returning customer.
Yeah. What about in the United States? There's another sort of raft of states that are moving incrementally closer to legalization. Illinois just went legal. Florida is trying to get the recreational thing going, having a bit of a struggle there. But where do you see the big opportunities in the U.S. in 2020?
Well, I mean, I continue to think that the Florida market is actually pretty interesting. Both from a medical standpoint, they continue to have the medical numbers that kind of just blow the numbers right out of the water. But there's also this make it legal campaign that's going on right now, where they're basically petitioning, trying to get enough signatures to get it on some type of ballot. And that would be fairly significant because we think that could be a pretty big rec market as well. California probably starts to get a little bit more right-sized this year. I don't think it happens completely this year, but it'll be much like the Canadian market, where there's such a big black market and they have to transition that over to the legal market. You saw so many issues last year with supply. Now that supply probably catches up to a certain degree, and you'll start to see more of a push into the regulated market versus the black market. So that's an opportunity. And then, obviously with the numbers that have come out of Illinois so far, what you're seeing there is, or what they think they're seeing there is, a real sort of adoption of the product from some of the consumers that are outside of Illinois but are neighboring states. And so that's going to be an opportunity that we'll have to watch and see, sort of what happens, and if those sales still get driven by people coming into Illinois to buy. And then the third area, or I guess the fourth area that we think is interesting is that, sort of New York tri-state area, where, the governor there has put out a proposal this week, or suggested that they put out a proposal where, they work together to create some sort of legalized zone for recreational marijuana. And it's not just New York, it would be the neighboring New Jersey, Pennsylvania as well, which would, and Connecticut, which would also, really produce a fairly significant region of consumers. There's probably 25 or 30 million people in that area that would immediately be new consumers to the market.
Right. The situation in California continues to be characterized by excess in terms of players in the space, and the demand doesn't seem to be matching the expectation that was forecast in 2019. Do you see that improving at all?
Yeah, I think it'll happen. We know the market's there, right? Like, I mean, obviously the black market is massive. It's just a function of converting that black market to a legal market, and that's comes through a few different avenues. One is by reducing the ease at which the black market is there, and that obviously comes through law enforcement. And then obviously pricing is the second. And as we've seen, a lot of these facilities that were built in, sort of 2018, 2019 took a little bit longer to come up. And so to begin with, there was a shortage of legal flower in California. And now that's starting to get filled in. And, probably by the second half of 2020, there should be kind of enough for what everyone on the legal side wants. And then as that continues to grow and the legal side takes business from the black market, then that production comes in line. So we think that there could be an opportunity there, especially for companies that have sort of lower cost production or have a brand. Like if they have a well-known established brand, then that's also going to help them.
About a wave of insolvencies in the cannabis space, which hasn't really materialized, though some companies look a little bit more fragile than others. Do you have any sort of ideas on that?
Yeah, certainly there could be a few this year. I mean, there was a few last year that kind of got announced at the end of the year. You're probably going to see a number more this year. Right now, I think a few of these companies are still holding on to lifelines where they think that they might have short-term financing that's in place. That's becoming more difficult to get. It's more expensive, higher prices, or extremely dilutive for shareholders. And in some cases, I don't even think that that's going to work. It doesn't matter kind of how dilutive they want to be. I don't think people are going to come in. And so there's going to be a wave of insolvency. There's probably going to be a huge amount of write down as well. If you take a look at some of the companies and some of the acquisitions that they've made, they really paid up for those. And now the auditors are taking a look and saying, well, how sustainable is the cash flow from that purchase you made? Should we be writing down, the goodwill that's sitting on your balance sheet? And at the same time, you're probably also going to see facilities get shut down or shut in. I mean, that's what we saw last year in sort of the October, November, December timeframe. I suspect you'll see more of that because, as we sort of have projected, we still think that there's going to be somewhere in the neighborhood of about 3.5 million kilograms in Canada that could potentially hit the market if everything was built out. And we know that the Canadian market itself, probably at full maturity, is only going to allow for demand of about 1.5 million. So there's kind of 2 million kilograms per year that either is going to get shut in or sold somewhere else. And right now that market doesn't really exist. I mean, there's a trickle that's going into Germany, but that's pretty much kind of it right now.
Interesting. Okay, so that's a great update as per usual there, Bruce. We'll leave it there for now and come back to you next week. Thanks very much for joining us.
All right, thanks a lot. Have a good weekend.